Hello everyone, and welcome to my new channel, Business Central Made Simple. If you're a bookkeeper, accountant, or completely new to Business Central, this channel is designed for you. In this series, I'm going to teach Microsoft Dynamics 365 Business Central in the same way I've taught accountants and clients when I was working in general practice in the UK. This isn't going to be just theory, and it's not going to be overly technical. My focus is on helping you actually understand how Business Central works in real-life scenarios. I'll walk you through concepts in a practical and structured way, just like I would in a client session. I will show you why things are set up the way they are, how to use the system efficiently, and most importantly, how to avoid common mistakes. We'll cover everything step by step, from the basics all the way to the more advanced topics. So whether you're just starting out or looking to deepen your knowledge, you'll find something valuable here. So if you want to learn Business Central in a way that actually makes sense in the real world, you're in the right place. So let's get started. In this session, I'd like to start with the trial balance. I won't be covering debits and credits in detail, as most people are already familiar with these concepts. So when I work with new clients on designing a chart of accounts, I focus on helping them understand how the trial balance works and why it's important. The trial balance is essentially a summary of all your general ledger accounts at a specific point in time. And its main purpose is to confirm that your books are mathematically correct and that total debits equal total credits. But in practice, the trial balance is much more than that. It's a foundation of your financial reporting. Your profit and loss statement and your balance sheet are both derived from the trial balance. So if your trial balance is wrong, then everything else that comes after it will also be wrong. So I'd like to begin by introducing the two main components of the trial balance, the profit and loss account and the balance sheet. Although each of these contains subcategories, it's important to first understand these two core areas, as they form the foundation of financial reporting. Okay, so let's take a closer look now at the trial balance. So we've got two parts to this trial balance. We've got the profit and loss on the top and the balance sheet on the bottom. Now, the profit and loss, also known as an income statement, is a financial statement that shows how much a profit or loss a business has made over a specific period of time. So say such as a month or a year. In simple terms, it answers the question, did the business make money or did it lose money? And what it includes is the income over here, which is money coming into the business, which in this case we have fees, interest receivable, other operating income, and expenses, costs, i.e. money going out to the business. So we've got advertising, depreciation, that's an accounting adjustment, but still an expense of the business, director salaries, employees NI, and so on and so forth. Now, what happens at the end of a period, the P&L account is reset to zero. This is done by posting credits to all the debit entries here and debits to all the credit entries here, and the difference being the profit or loss. In this case, there's a profit of 141249, which is then posted to the balance sheet reserves, which are here. And in this case, there's a loss of 2862.14. Just a few notes on the balance sheet. The balance sheet is a financial statement that shows the financial position of a business at a specific point in time. In simple terms, it answers the question, what does the business own, what does it owe, and what is it worth right now? So if you think of a balance sheet as a snapshot at a moment in time, for example, at the end of the month or year, unlike the P&L, which shows performance over a period of time, the balance sheet shows where the business stands financially on a specific date. The important thing to remember is the balance sheet's accounts are carried forward into the next period, as you can see here, with the P&L reserves here of 1449.65, which is a profit of 1412.49, less the loss 2862.14, which carry forwards a loss of 1449.65. So let's now have a look at this working in Business Central. Okay, so here we have the same trial balance that we looked at in Excel. I haven't included any categories or subcategories here, as I want to focus purely on what happens to the chart of accounts at the end of a period. In my experience, leaving these out makes it easier to understand the period end process, since categories and subcategories are simply there for structure and reporting. Now, I'll go ahead and set up and run a year-end process. This will clear down the profit and loss account, as discussed earlier, and transfer the resulting balance to the balance sheet reserves, which are down here and called P&L account on this occasion. First, we need to set up accounting periods, as this is required before we can run the year-end process. If we go to the magnifying glass and type in accounting periods, we have the option here now to select the accounting periods page. You'll notice that one accounting period is already set up. However, we need to add another period before we can proceed with closing the current year end. To do that, we go to Create Year. Business Central will automatically populate the start of the next accounting period, which is here, start date 1st of the 1st, 2025. It'll give the number of periods here, 12. We can change this, but for our purposes, we'll leave it as 12 because we're doing a full year, and the period length is 1 month. Press OK to that. And as you can see, the next period is now created. You can go on and create the period after that, so you can do 26, 27, 28, however many you want. We now need to, first of all, close the current period we are in before we can run the close income statement. So we go here to close year. Okay, I think we just need to, first of all, just delete this top line here. And now go to close year. As you can see, Business Central is now telling us the function closes the fiscal year from the 1st of the 1st, 24 to 31st of the 12th, 24. And once the fiscal year is cleared, it cannot be opened again. Do you want to close a fiscal year? Or yes. And now this particular fiscal year is closed. However, it's important to remember that this does not stop you from posting into this particular year. Even though it's marked closed, you can still post entries into this year. Once the accounting period has been closed, we can move on to running the close income statement batch job. We do this by going back to the search magnifying glass, typing in close income statement, and this brings you to the page. So Microsoft has already entered the date, 31st of the 12th, 24. We then need to choose a general journal template, which we'll use the general one. And the batch job, there should be a default one. There is, we'll use the default one. Now, in practice, you may want to create a specific job to run your year-end journals, just so you can identify them easier. We put a document number in. I would say just put in year-end 31st, 12, 24. And here now we choose a retained earnings account. Now this is the account where the balance of the P&L account, once it's been closed down, will get posted to. So basically where the profit or loss will get posted to. We'll select from full list, but nothing's showing here, so I'll just remove a filter. Let's see if anything happens. Yep. So in our case, the account number is 80040, I've called it the P&L account here, but Business Central may say reserves or reserves brought forward. We'll select that one. OK to that. We then have the post to retained earnings account drop down. Now what this actually does, it determines how the net income or loss is posted to the balance sheet. So it specifies whether it's posted as a single summary line for the total profit and loss, which is the balance, or separate detail lines for each account. In our case, we'll use the balance. Then we enter a posting description. We have close income statement, which is fine for us, and press OK. Business Central now tells us the journal lines have been successfully created, and we can now navigate to the journal to review and then post it. So again, we go to the magnifying glass search function, type in general journals. So you can see the journal lines have been created and opposite entries have been created for each GL account. So for example, the fees were credit balances, so we post debit balances to clear them down. And obviously the expenses were debit balances, so we post credit balances to clear them down. And if you also look at the end of this journal, at the reserves account here, we have a credit balance of 1412.49, which is the balancing entry for all the above credits and debits. Now these entries should clear down the P&L account and post this amount to the reserve account. So we can post that now. Do you want to post the journal lines? Yep. There you go. The journal lines were successfully posted. Press OK to that. OK, we're now back in the chart of accounts, and you can see that the profit and loss accounts, both income and expenses, have been cleared down, ready for the new financial year. You will also notice that the reserves have been updated to include the profit for the year, and the figure now matches our Excel example of 1449.65. That's really the key takeaway from this session, that the trial balance is made up of two main parts, the profit and loss account and balance sheet, and that the subcategories are simply there for structure and reporting. In my experience, once this concept is clear, the chart of accounts becomes easier to understand and as a result, much easier to design and modify when required. In the next video, I'll introduce subcategories in more detail, explain how they work, and share some best practices for designing a chart of accounts. I'll also cover some of the key settings on the GL card. Finally, I'll demonstrate how to design and upload a chart of accounts using configuration packages, which is the quickest and most efficient way to do this. Thank you for watching, and I hope to see you in the next video.